Imagine executing a strategy with a 53% win rate backed by data that is designed to leverage a 2-to-1 risk-reward ratio. A strategy like that is like flipping a coin where you win $2 if it lands on head, but you only lose $1 if it lands on tails. Now, over time, that edge is going to add up, as you'll see here in just a second. This SPY call buying approach isn't just simple, it's also very powerful. With consistent execution, it has the potential to deliver real, measurable results for your trading. Now, let's get into it. I posted this strategy over on the blog a few days ago in early January of 2025, or starting the new year. And I first want to focus on the risk reward, the 53%, the 2-to-1, all that. I want to focus on that first because that's really one of the most important things for a strategy. In this particular strategy, we're only buying calls on Monday, and we're buying calls with 7 days to expiration on the SPY ETF. Now, what I found is that buying an in-the-money option, a Delta 70, actually performed better because if you think about a 7-day option, if you buy out of the money, the theta is really going to be against you. So as you buy more in the money, theta is not as bad. It's still there, of course, but it's a little bit less, right? So we're buying a Delta 70 option on Monday afternoon, and we'll go over the technical sort of setup here in a second. And we're going to set a 50% stop loss and a 100% profit target. So that's where we're going to get the 2-to-1 risk reward. And as you can see over the last 2 years, this is where we got the 53% win rate. Our average winner was about $600 and our average loser was about $340. So this is where you get your 2-to-1 risk reward. And it's basically like flipping a coin, whether or not it's going to win or lose. However, we're using technical analysis and a unique indicator here we'll talk about. But I also want you to look at the profit and loss curve here. So obviously there's some, the profit goes up, we kind of sideways, profit pulls back, very similar to an uptrend in a chart, but we are going from the bottom left to the upper right. And what I want you to notice here is that there are periods of time where you can end up with a few losers in a row, just like any strategy. But that same amount of winning in a row, I'm going to call this four or five losers in a row, and then we end up with 4 or 5 winners in a row. Profit-wise, you can see how you end up making money because, again, the risk reward is in your favor. You're winning twice as much as you're losing, even though you're keeping that, I'm going to call it a 50% win rate. Now, as you can see in this setup, there's 2 technical conditions on Monday. First of all, we want the SPY to be above its 20-day moving average on the daily chart. And basically, we want to leverage bull market scenarios, and the 20-day moving average is a good way to say, hey, is the market in a short-term uptrend? If it's above the 20 SMA, let's buy that call option. So that's one of the parameters. The other parameters, we actually don't want the market to be too overbought because if it starts to stall out, our long call option is going to lose value. So we're going to set a max RSI of 70. So these are the 2 traditional technical analysis things we're going to look at the time of entry. And again, we're taking this trade on Mondays at 3:30 p.m. But before the market opens, we're going to be checking the weekly triumph rate here at alphacrunching.com. And we're going to be looking for Monday to be above 50% or at least increasing from the previous week. And I've put some examples here. And just as a reminder, if you haven't seen any of these videos before, what the WTR or weekly triumph rate tells you is the percentage of time that Monday has closed higher the following week. So when we see these numbers like 100%, 80%, 60%. This means for this particular day that 60% of the time the market has closed higher 1 week later. And we can see it actually declining. So it gives you a little bit of a week over week heat map, if you will. And so what we want to do is say, hey, we only want to buy calls if Mondays tend to close higher, right? And we're above the 20 SMA. We don't want to be buying calls in a massive pullback because we never know how far it's going to go. And so we look at this before the trading week begins. This stuff is available on Sunday before the week begins. So we know even before Monday, hey, should we be taking this trade? So in this example, 9/25/2023, we had dropped below 50%. So at this point, we're not interested in buying calls this week. So we know this on Sunday, and we don't even have to look at anything on Monday. So that's a pre-market tool before we even consider that trade. And one of the cool things here is that on the Trade Ideas tab for subscribers, we're going to put this trade here. We're going to look at the WTR data and tell you if the strategy is ready for the week or not. And then if it is, you're simply going to follow the rules here, right? And if you click on the trade idea, it'll give you more details about it. Again, we're going to enter the trade on Monday at 3:30, only if the SPY is above its 20 SMA and RSI is below 70 on the daily chart. So that is the quick and dirty version of the strategy. I'm going to leave a link to this blog post for your reference in the description. There'll also be a link to a mini video course on this strategy. We're going to test different deltas, different profit taking, so you can get an idea of maybe that particular Delta 70 option isn't something you want to do. You want to buy out of the money. Well, we're going to test that and put that into the video course. So thanks for watching. Let me know if you have any questions, and we'll see you in the next video.